Now, Dan, I don't know how much you pay attention to social media trends, but the number of memes comparing this infrastructure plan to the lack of infrastructure it actually addresses was so aggressive yesterday online. So tell me a bit about the effect this is going to have on small businesses.
Well, the question here is do we need all this stimulus? And what comes along with this stimulus are tax increases. Now, the American people, I don't think are as aware as they should be as to what is being proposed. It's a lot of taxes. Now, we hear the mantra of we're going to tax wealthy people and we're going to tax those big corporations. But what's in the fine print or projected to be part of the fine print are small businesses, specifically what's called pass-through entities. Now, those are the mom and pop shops. So you have to ask yourself, those businesses that have been struggling for more than a year now, do they really need a tax increase? And the answer is no. And keep in mind, Rachel, that small businesses in this country employ 50% of the people. Now, what's going to happen when you tax them? You're going to put more pressure on them, and then they can't afford to keep people, and even the bigger picture, can't afford to stay in business.
Right, and I think you're right. People often lose sight of the fact when it said, oh, it's only going to hit this tax bracket. That won't affect me, but that'll affect where you get your goods, where your family is employed. It's all a trickle-down effect. Let's talk a bit about those taxes. The plan is calling for a corporate tax rate of 28%. Republicans and Democratic Senator Joe Manchin are calling for the president to lower that to 25%. I think a lot of people also a bit lost on what difference the 3% makes.
Well, here, let's put this in perspective. First of all, I just want to clarify, those tax increases relate to C corporations, which are large corporations, not the small businesses. Right. So when they're talking about that tax rate, part of the reason they're looking at 25 instead of 28 is the world average on the corporate tax rate is 23.8%. But how about this? China is at 25%, a communist regime, and we're going to have a higher corporate tax rate than them? I mean, where are we going with this? Talk about pulling ourselves out of world competition. And what ultimately happens here, Rachel, is migration. Businesses, corporations are going to look to move. And even if there's a minimum global tax, which has been floated out there, I don't think that will happen, where companies will move their headquarters to other countries with lower corporate taxes. You will see more migration within the states as companies look to get their taxes down overall. So Florida, Texas, all those states, we're going to continue to see migration there.
And we've already seen so much of that, people moving out of states like California and New York, as you said, to get those lower taxes. Speaking of China, though, Dan, do you think the president is trying to flex in a way to other countries like China with this infrastructure plan?
Well, I think that's the message he's trying to send, to say, hey, we're going to be able to keep up. But look, China keeps a close eye on what the United States is doing. I mean, that's very clear. And they could see that there is a big divide in this country over this issue. So it's divide and conquer, right? So let the president go forward with this plan. We're taxing ourselves into oblivion, and there's going to be a continued discourse amongst Americans about all this tax and spend. You just can't keep it up.
All right, that's all the time we have for now. Professor Dan Geltrude, thank you so much, as always, for joining us.
Thank you, Rachel.
Much more ahead.